Good morning, friends. Today I am going to discuss that from 1st October 2019 onwards, RBI has instructed all banks to link their PNSB retail floating rate loans as well as MSME loans to link with an external benchmark. So this is the first time this is happening in India. Then you may ask, what was happening earlier? Earlier, banks were linking with an internal benchmark rate. This internal benchmark was arrived by calculating cost of funds, CASA deposits, fixed deposits, source of funds, from where they get the deposits, then operating costs. Everything has been taken into account and they arrived at the internal benchmark. Then government makes monetary policy rates change every bi-monthly. Every bi-monthly they make changes in the policy. Sometimes they may change or they may continue. So actually the aim of the Reserve Bank of India is, as and when the policy rates are changed, it must be transmitted to the common man. Common man means the person who has availed a loan from a bank. He has to get the benefit of reduction. If there is any reduction, it should be passed on to him the very next day. Then only he can enjoy the decisions of the RBI. Then in 2003, we were using BPLR, benchmark prime lending rate, to make more transparent the lending rates. Then in 2010, this has been changed. Base rate has come. Base rate has replaced benchmark prime lending rate. Then in 2016, from 1st April 2016, another has come, right? MCLR, marginal cost of fund-based lending rate. Here, the marginal cost of each bank has been arrived, taking into account the cost of short-term funds, especially repo rate also taken into account. So 90% of the weightage was given to short-term funds. This also was not satisfactory, because as and when the government reduces the repo rate, in tune with that, banks are not reducing their lending rates. This is quite natural also. In 2015 January to 2016 April, 4 or 5 times RBI up to 1.25 repo rate has been reduced. But banks has reduced only 25 basis points or 50 basis points. Even some banks has not reduced. And I do remember once the then State Bank of India chairman, Arundhati Bhattacharya, she was telling, why should we reduce our interest rate as in when Reserve Bank of India reduced their repo rate? We are not depending on repo funds. We are doing business with our own funds. Then why should we reduce it? This is quite true also. Then in India, State Bank of India gives the lowest rate because they got cheaper funds, CASA deposits, current account and savings bank. Current account is a no-cost fund and savings bank is a low-cost fund. So their mobilization of resources cheap compared to other banks. That is why they are able to lend at a cheaper rate. But even all these things are there, government decisions are not being implemented by banks as and when these monetary rates are being changed. That is the main problem here. So, at present, that means from 1st October, 2nd October is Gandhi Jayanti. Every new things happen on the Gandhi Jayanti day. So, prior to Gandhi Jayanti, that means on 1st October, RBI instructed banks to follow the new rule. This has been circularized on 4th September. This circular is there in the website. And what they intent now is your lending rate must be linked to an external benchmark. This external benchmark can be either the repo rate, one, or 90 days Government of India Treasury bill yield published by our one institution is there, that is benchmark BP, Financial Benchmark of India Private Limited. So Financial Benchmark of India Private Limited is publishing the yield. So 90 days Treasury bill yield published by Financial Benchmark of India Private Limited, or 180 days Treasury bill yield published by FIBIL, Financial Benchmark of India Private Limited, or any other rate, any other benchmark marketed rate published by FIBIL. So these are the four rates to be taken by banks. RBI has no condition, you have to follow this rate, you have to rate, but it must be linked to external benchmark. So far this linking was with reference to internal benchmark. So once if this rate is linked, the immediate result is then every 3 months they have to make a relook, you have to do a change. That means only floating rate PNSB loans as well as MSME loans. So every 3 months they have to make a review of the interest fixed and they have to change it if there is a change in the rate, benchmark rate they have taken. So definitely this is a transmission of policy rates to common man. So what I personally feel is this is a government which does what it says. I do remember in 2014, before the election, government Modi ji told that we will be controlling, changing the interest rate. Then the then RBI governor told no, interest rate is being changed by RBI. Government has no role on it. Then after a week, he has come into power. Then regulator changed his view. He said that we will support the views of the government. We will support the government. Then now MPC, Monetary Policy Committee, has been constituted. Bi-monthly they are taking decisions. Now as and when decisions has been changed, that means repo rate has come down. Definitely bank has to reduce their interest rate. But some people are telling that how can we link repo rate to bank loan? Okay, this is only an external benchmark. Then each bank can fix its own spread along with the benchmark. That means if it needs 3% extra, that can be added. That spread it can be added. Provided the credit risk of the customer changes, then we have to make separate assessment of the customer and we have to do accordingly. Otherwise, the spread also you can add. But even if you add your spread to the benchmark, then if you are charging higher rate, no off-takers will be there for your loan because your market rate is high. So this is a good move. If we try the history of India, in 1918, Usurious Loan Act was there. That means the government prohibited exorbitant interest charging by money lenders. Then till 1964, no interest control was there for deposits by RBI. Then later, RBI deregulated interest rates. Each bank can change its interest rate depending upon its assets and liabilities. So, asset liability management committees of each management, each bank decided the internal benchmark rate. But now the internal benchmark has been changed to external benchmark. That means each bank has to link its interest rate to external benchmark. As I told the external benchmark. This is a good decision by RBI. So the benefit of this are the common man. So if you have taken a housing loan, if there is a reduction in repo rate, that will be passed on to the customer within a short span of time after the implementation by the monetary policy committee, after announcement of the change by the monetary policy committee. So his EMI will come down. So let us welcome this good move, and this is going to be implemented very shortly from 1st October 2019 onwards. Thank you.